Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of May 18, 2015. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week was certainly kind in Delaware mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage rates have just been selling off since the middle to end of April. Bond just been selling off. Tried to have a rally, but then sold off again. Big red candle. Looking for a bottom. We were recommending locking. Finally, last week, we found the bottom. As you can see there on Thursday, we got the green candle, rallied higher. And then Friday was huge because we closed above the 200-day moving average, which was capping us. That's a good sign. If you take a look at the next shot there on the screen, you can see the 2-year trend for the bond has been to trade up. Well, last week was the first week we broke below that trend line, which was very bad news. So we needed to close back above that, or bonds could have sold off and rates could have spiked a lot higher. So that was definitely good news. We closed above the long-term trend line, which is the 200-day moving average. And with the gap up, that's a great bullish technical signal. So we're going to recommend floating your Delaware mortgage rate to start the week to see if bonds can improve on this, and we can see if home loan rates could move lower. Now, in economic news, big report last week was the retail sales report for April 2015, and it was a stinker. 0% change from March, so retail sales not improving at all. So it looks like consumers, the money they're saving at the pump with lower gas prices, they're banking in their savings account. They're not putting back into the economy. So that is not good news. So with the bad economic report, we don't see the Federal Reserve raising short-term interest rates until 2016 if this continues. So we'll have to keep an eye on that. Then we saw a measure of inflation at the wholesale level, which is the Producer Price Index. That was for April 2015. That was down negative 0.4%. Below expectations of 0.2%. So we're not seeing any inflation at the wholesale level, actually a little bit of deflation. So that's the cost of manufacturers buying goods to, and services to make their products, which will come out to consumers. So it doesn't always translate into consumer, which is the CPI. That comes out next week. We'll have to see if that is very tame as well. Because tame inflation means the Federal Reserve doesn't have any impetus to raise rates sooner. Then we saw the week initial jobless claims come out on Thursday. They came out at 264,000 claims. That's down 1,000 from the previous week, and that's a 15-year low we're hovering at for jobless claims. So very good reading on the job market there. And now this week's claims is the ones they'll use for the jobs report for May. So we'll have to see how that comes out this week. And then economic news abroad. China's central bank, which is the People's Bank of China, cut its 1-year lending rate and its deposit rate by 25 basis points because their economy continues to show weakness. So they're trying to prop up their economy like the Feds have done here. So with the rest of the world's central banks keep easing on lending and lowering their lending rates, we don't see how the Fed's going to be able to raise rates here without hurting the U.S. economy. So again, we're not seeing short-term rates raised until 2016 with the news we're getting. Then in housing, CoreLogic released its national foreclosure report for March 2015. It showed continued improvement in the foreclosure market. Only 542,000 homes are in some form of foreclosure compared to 729,000 last year. That's a decrease of 25.7%. The foreclosure inventory only represents 1.4% of all homes with mortgages and is down from 1.9% last year. So overall, very good report on the foreclosure market there by CoreLogic. And then FHA announced that they were going to be changing guidelines to their single-family handbook for originating FHA mortgages. That was supposed to go into effect June 15th. They pushed that back to September 15th. There's a lot of changes coming into effect. The big one that a lot of people aren't aware of is that if the changes go into effect September 15th, as stated, student loan debt will be treated totally differently. Right now, FHA is one of the few lenders that will allow people that have student loans deferred for more than 12 months to not count those against the liabilities when qualifying for a mortgage. That will no longer be the case with FHA loans with a case number September 15th or after if the guidelines go forward as they just mentioned. So huge difference in what you qualify for. If you're currently qualified for student loans being deferred for more than 12 months, you need to get under contract before September so that this does not affect you. And then USDA rural housing loans are operating on still about a 10-day turn time to review files, so please plan accordingly when you're writing your new contracts. And then the local news, the next first-time homebuyer seminar in Newark, Delaware at the Christian Hilton Hotel is Saturday, May 30th from 10 a.m. to noon. You can register for that event by giving us a call in the office at 302-703-0727 or online www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.